Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like Aave or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the detail are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome back to the Deep Dive. Okay, today we're really going to sift through a fascinating stack of sources. We'll be pulling out the most important insights from the world of crypto, blockchain, and, well, how these technologies are quietly, or sometimes not so quietly, making their mark, and in some genuinely unexpected places, actually.
Yeah, it's moving fast.
It really is. Yeah. Our goal for you today is basically to cut through all the noise, the endless headlines. We want to extract those essential nuggets of understanding, give you a bit of a shortcut to being truly well-informed on some of the most dynamic developments shaping, well, our financial and technological future.
Absolutely, getting straight to the point.
Exactly. And to kick things off, we're diving straight into a question that pops up every single year in the crypto community: Red September. Is this historical trend still holding sway, or are we maybe witnessing new, powerful forces at play, forces that are rewriting the old rules?
It's an excellent starting point, definitely, because historically speaking, the data paints a pretty clear picture. September has often been a notably challenging month for Bitcoin, and, by extension, for many other cryptocurrencies too. We've observed this consistent pattern of negative performance that has, for years, really given traders a reason to pause, maybe be a bit more cautious.
It's true. I mean, if you actually look at the track record, it's pretty stark, isn't it? From 2013 through 2022, Bitcoin saw some significant declines in most Septembers. We're talking about dips that ranged from around 3% all the way up to a really sharp 19% back in 2014.
Ouch.
Yeah. And a particularly tough 13.6% in 2019. It's honestly created this whole expectation of a September effect.
That kind of narrative.
Exactly. The only real exceptions were a couple of, modest gains in 2015 and 2016. Otherwise, it almost felt like this annual financial curse or something.
And what's truly fascinating here is really understanding the The underlying combination of factors, the things often cited for this pattern, it's probably not just random chance, right? A major contributor is often quarter-end rebalancing.
Ah, right, the big players shuffling things around.
Precisely. You have institutional funds, larger investors. They might lock in profits or shift out of what they see as riskier assets as Q3 closes. That naturally creates some selling pressure. We also frequently see a kind of liquidity drain in September.
Meaning less cash floating around.
Yeah, potentially increased bond issuance, maybe tighter financial conditions in the broader market, just pulling capital away from more speculative assets like crypto often is. And beyond that, macro uncertainty plays a huge role. We often anticipate significant economic news, maybe geopolitical tensions flare up, upcoming Federal Reserve decisions following the Jackson Hole speech, or critical inflation data coming out.
All that stuff makes investors jumpy.
Yeah, exactly. More risk averse. And finally, there's definitely a strong element of just, seasonal psychology, the September effect itself. It can become a kind of self-fulfilling prophecy where traders sell simply because they expect the historical pattern to repeat.
But, and this is where it gets really captivating, despite that pretty entrenched historical data, the last couple of years have actually, they've bucked the trend in a big way.
They really have.
We saw Bitcoin post positive performance in September 2023, up 3.9%, and then again in September 2024 with a gain of 7.3%.
So what changed?
Exactly. What has fundamentally changed to drive this kind of shift? It really seems to be the growing presence of major institutional players, the kind of sticky money you hinted at earlier, entering the Bitcoin and broader crypto space.
The big guys.
Titans, yeah, like BlackRock. Their CEO, Larry Fink, has had this remarkable public evolution in his stance on Bitcoin, hasn't he?
Oh, definitely. From very skeptical, too.
Right. He once called it, like, a currency of fears. But more recently, he's acknowledged it as a potential safe haven during geopolitical uncertainty. So when trillion-dollar asset managers and their clients start aggressively accumulating Bitcoin, it's not just more capital entering the market.
No, it's different capital.
It's capital with different mandates, probably longer time horizons, and a much lower propensity to be swayed by short-term seasonal patterns. That has to fundamentally alter the market's resilience, you'd think.
This really raises a crucial question for you, the listener, then. Given these sort of conflicting signals, the historical trends versus these powerful new institutional influences, how does this maybe redefine your understanding of market behavior, particularly this month? If that old September effect is being diluted or maybe even overridden by these larger forces, what does that imply for other historical patterns we've perhaps come to expect?
That's a great point.
And just for context, as of September 1st, Dubai time, the market is actually showing net outflows of about $221.3 million. The global crypto market cap is sitting just under that $4 trillion mark, around $3.87 trillion. We're also seeing decentralized or DEX dominance at about 34.98%, which, interestingly, implies that more trading activity is currently happening on centralized exchanges.
Interesting. So the action's more centralized right now?
Seems that way at the moment. And looking at current prices, Bitcoin is hovering around $109,700. That's down about 3.13% in the last 7 days. Ethereum is at $4,456, down 6.92% over the same period. And Ripple XRP is at $2.80, seeing about a 7.35% drop in the past week. So these immediate numbers, while negative, they probably should be viewed through that lens of the broader shift in market structure we were just talking about.
Right. Don't just look at the daily tick, look at the bigger picture.
Exactly.
And looking ahead, just for September 2025, we do have some potentially significant macro factors on the horizon that could, continue to shape things. The inflation data, CPI Consumer Price Index, that's due on September 11th.
Always a big one.
Always. Then, Federal Chair Jerome Powell's interest rate decision on September 17th. His recent Jackson Hole speech kind of hinted at a potential rate reduction.
Which the markets would love.
Oh, definitely.
Yeah.
If that happens, it could provide a boost across all markets, including crypto, just by easing financial conditions. Plus, there are these ongoing efforts by President Donald Trump for a potential peace deal between Russia and Ukraine. Clarity on that is expected by early September.
That could be huge for confidence.
Absolutely. A significant de-escalation of geopolitical tensions could really increase investor confidence across all financial products, potentially overriding any lingering Red September feeling. Okay, now let's shift gears a bit and explore a truly groundbreaking development. This one is really quite something. The U.S. Department of Commerce has taken this remarkably bold step. They've actually posted the second quarter GDP data onto the blockchain.
Yeah, I saw that. Pretty wild.
It's not just some minor tech upgrade. It's literally the very first time federal economic statistics have been hashed using SHA-256.
Yeah.
It feels like a really significant move towards increasing transparency in government data.
It is significant, but what's fascinating here, I think, is to truly grasp the specific benefit of using blockchain in this particular context. Because while blockchain, by its very nature, makes data tamper-proof after it's been recorded.
Right, immutable.
Exactly, but it doesn't inherently guarantee that the initial data itself is truthful or accurate. That's crucial. So if incorrect or even, say, misleading information were uploaded by mistake or even intentionally, it would just sit there on the blockchain forever. It's a permanent record, warts and all.
Okay, that's a really important distinction, isn't it? If the initial input could theoretically be flawed, what's the actual value here?
Exactly, that's the question. The core value, then, isn't really about verifying the initial truth of the data. It's about providing irrefutable, cryptographic proof that the data hasn't been altered at any point after its publication.
Ah, okay. So it's about integrity over time, an audit trail.
Precisely. It provides an audit trail for data integrity. And the sources highlight that this specific GDP data was posted across 9 different blockchains, which is remarkable distribution.
9. Wow. Which ones?
Bitcoin, Ethereum, Solana, Tron, Stellar, Avalanche, Arbitrum 1, Polygon, and Optimism. A real spread.
That's incredible redundancy.
Yeah, and this broad distribution was supported by BitNetwork, Chainlink Labs, using their CCIP protocol, and even Kraken got involved.
And this whole initiative, it's backed by President Donald Trump, right? With the stated aim of making U.S. economic data immutable and globally accessible.
That's the stated goal, yes.
And you can actually access these 6 key data points of the U.S. economy, like, the real GDP level, it's a percentage change, the PCB price index, directly on the Bureau of Economic Analysis website, www.b.gov. Makes it incredibly easy to check.
And to illustrate why this kind of integrity matters, think back to that real-world example. The Bureau of Labor Statistics data manipulation controversy in early 2024. Remember that? Where 818,000 jobs were reportedly added, potentially for political purposes. That only came out because of a whistleblower.
Right, I remember that whole thing.
Well, this blockchain method, precisely because it creates that unchangeable record, could potentially prevent such undetected manipulation from happening again.
Because you'd see the original hash, and any later hash wouldn't match.
Exactly. The SHA-256 process is key here. It's an incredibly sensitive cryptographic hashing algorithm. Even if you make a tiny, almost imperceptible change to the original data, like you mentioned adding just a period to I love music, the resulting hash code changes completely, totally unique. This allows for instant detection of any alteration, no matter how small.
That's powerful.
It really is. So if we connect this to the bigger picture, this feels like a genuinely powerful step towards transparency and accountability, especially for government data that often faces scrutiny, in Senate hearings, public discourse.
And the cost is tiny, apparently.
Yeah, remarkably low. The sources say less than $2 to $5 for recording across all 9 of those blockchains. It's practically nothing for that level of assurance, which raises an important thought for you, the listener. Okay, it doesn't magically prevent an initial misleading upload. We got that. But does this heightened cryptographic transparency fundamentally change your trust in official economic data? Does knowing it can't be secretly altered after the fact empower you to maybe analyze it differently?
That's something to chew on. Okay, so beyond these big macro shifts and government moves, what does this all mean for individual blockchain networks, their ecosystems? Let's maybe zoom in on some notable updates. Tron and Ripple seem to be making waves. First, Tron.
Yeah.
Justin Sun recently announced a pretty significant 60% cut in Tron network costs. That was effective August 28, 2025. This decision, it was approved by the Tron Super Representatives, and it feels like a big deal, especially since Tron handles, the majority of stablecoin activity?
It does, yeah. A huge chunk of it. So lower fees matter there.
Right. This move is clearly aimed at driving more user adoption, encouraging higher transaction volumes, and, securing long-term profitability. By making transactions cheaper, Tron becomes a more attractive platform, right, for both developers and everyday users. Could boost its competitive edge against other Layer 1s.
Definitely a competitive move.
Plus, Tron will also adjust its fees quarterly based on the TRX price and network activity, trying to keep that balance between being competitive and sustainable.
Makes sense. These cost reductions are absolutely strategic. They really speak to the fierce competition in that Layer 1 space. Tron has made a very clear play for stablecoin dominance, and lower fees are pretty essential to maintain that lead. especially when you consider other chains are also constantly trying to optimize their throughput and cost structures.
It's a constant race for efficiency.
It is. And ultimately, that benefits the user, which is good.
Exactly. Okay, and then we have Ripple. They seem to be making some very aggressive, maybe forward-looking moves into real-world asset RWA tokenization.
RWA is definitely a hot topic.
It really is. They've launched their RLUSD stablecoin on Aave's Horizon RWA platform. This looks like a clear strategic play to tap into that massive, projected $16 trillion tokenization market.
16 trillion, that's the number everyone's chasing.
It's huge, and RLUSD can now be used as collateral alongside existing stablecoins like USDC and GO4. That's a significant boost for Ripple's presence in decentralized finance.
Yeah, gets their foot firmly in the door for DeFi collateral.
It signals their intent to be a major player in bridging traditional assets with blockchain tech. And it's not just Tonkus. Apparently, Prepco, a leading real estate RWA platform, is already operating on the Ripple network. So there's tangible progress.
Okay, but this raises an important question, doesn't it? While these are definitely strategic, maybe even visionary moves, the market always has its own immediate dynamics, its own reactions. We can't really ignore the recent news that Coinbase reportedly dumped about $60 million worth of Ripple XRP.
Oh, yeah, I saw that headline.
Effectively reducing its treasury holdings by like 60%. And that action, as we saw, did have an immediate impact on XRP's price. Pulled it down a bit.
Right. So how do you square that? How do you reconcile these aggressive long-term strategic plays like building out RWA infrastructure with these immediate short-term market reactions?
Yeah.
Like a major exchange, Coinbase, offloading a big chunk of its holdings.
Yeah.
Is that like a vote of no confidence from Coinbase, or is it just market mechanics, treasury management stuff?
It's a critical tension point, isn't it? It really highlights the complexity here. On one hand, you absolutely have Ripple focusing on fundamental utility, building the rails for what could be an immense future market in RWAs. That's the long game. On the other hand, you have a large institutional player, Coinbase, making what's likely a treasury management decision. Maybe it's driven by their own liquidity needs, maybe a risk assessment, maybe even just reevaluating asset allocations for reasons completely unrelated to Ripple's long-term strategic vision.
Could be anything, really.
Exactly. For you, the listener, it really highlights that even as the underlying technology gains ground and these new use cases emerge, digital asset markets remain susceptible. They're vulnerable to the actions of large holders and just broader market sentiment. It's this constant dance, between long-term value creation and short-term price volatility.
A delicate balance. Okay, now for something that seems to be rapidly gaining momentum, let's shift our focus regionally. Let's look at how Dubai and the UAE are really positioning themselves at the forefront, combining blockchain with other huge emerging technologies like artificial intelligence.
Yeah, the UAE is making some serious moves there.
It's a truly fascinating convergence happening, seemingly at a national level. First up, there's a new strategic partnership between CoinMENA, they're a leading digital asset platform in the MENA region, and Zand, which is a UAE-based fintech and financial services group.
Okay, bridging TradFi and DeFi again?
Looks like it. This collaboration is particularly significant because it aims for basically seamless fiat to crypto integration.
The holy grail for adoption, really?
Pretty much. Think about it. This means efficient fund transfers directly between Zand bank accounts and CoinMENA wallets.
Okay, that's practical.
Yeah, for users and businesses in the region, this dramatically lowers the barrier to entry into the digital asset space. It bridges traditional finance and decentralized finance in a very practical, user-friendly way. Simplifies the whole onboarding process.
Makes it easy for people.
And they're apparently not stopping there. Subject to regulatory approval, of course, future plans include exploring RWA tokenization, institutional-grade custody solutions, and developing broader digital economy infrastructure.
Wow, so a whole ecosystem play.
It really shows a holistic, almost national-level approach to embracing these technologies. Then, over in Abu Dhabi, you have G42 Holdings. They're a prominent AI and cloud computing company.
G42, yeah, they're big.
They've taken a strategic stake in IOPn, valuing it at over $1 billion. This significantly strengthens the UAE's role as a global tech hub, particularly in that AI and blockchain intersection.
$1 billion valuation shows serious intent. And at the core of this G42 IOPn initiative is this concept they're calling a sovereign AI stack.
Sovereign AI stack. What does that mean exactly?
Well, it's powered by NVIDIA GPUs, anchored by IOPn's op chain. But sovereign AI stack essentially means the entire AI infrastructure, we're talking hardware, data, algorithms, is controlled nationally by the UAE in this case. It's about ensuring data privacy, security, and crucially, strategic autonomy for the nation in the age of AI.
Okay, so national control over their AI future.
Precisely. And OpChain itself is designed as a reference architecture for decentralized AI. It integrates AI computing power with sovereign digital identity, so you get not just powerful AI, but AI that's ethically and securely tied to verifiable identities and under national oversight.
That's a very different approach.
It is, and this isn't just about general tech adoption either. It's really about building a digital foundation for the nation. OpChain is built to support multiple critical sectors: digital governance, finance, healthcare, real estate.
Big ones.
Yeah. It enables everything from RWA tokenization and secure payments to things like biometric authentication. The overarching aim here is pretty profound. It's to unlock liquidity for national assets and provide regulated, secure access to global capital markets.
Wow. And they're going even further.
Apparently so. With projects like Project Atlas, this is described as an advanced tokenized liquid gold.
Tokenized gold.
Yeah, which will serve as a sovereign-grade AI data center. Think about that. They're literally backing their digital infrastructure, their AI capabilities, with physical tokenized assets, creating a whole new kind of digital economy foundation.
That's genuinely incredible to see such ambitious integrated projects being driven at a national level like that.
It really is.
It feels like a stark contrast to the more fragmented, often startup-driven innovation we see in other regions, maybe.
It definitely stands out. And if we connect this to the bigger picture, this clearly positions the UAE not just as an adopter of this tech, but potentially as a gateway, a leader for sovereign AI and blockchain adoption globally. It showcases a truly forward-thinking approach, leveraging these powerful technologies for national digital infrastructure. It could even be a potential blueprint for other nations thinking along similar lines.
A blueprint for digital sovereignty, almost.
You could say that. It really encourages us to consider. How does your perspective on the convergence of AI and blockchain evolve when you see these massive government-backed initiatives, complete with sovereign stacks, tokenized physical assets, shaping national strategies? It feels like a very different scale compared to, individual startups just experimenting in a garage somewhere.
Absolutely. Wow, what an incredible deep dive today, seriously.
Yep.
From the intriguing patterns of Red September and how maybe institutional shifts are challenging it,
Right.
to the U.S. government's really groundbreaking foray into blockchain for transparency.
Unprecedented stuff.
And then these deeply innovative strides in regional ecosystems like the UAE, combining AI and blockchain at a national level. We've covered a lot of ground pretty quickly.
As you certainly have.
Our goal, as always, is just to leave you with those key insights, maybe some fresh perspectives on these rapidly evolving fields that are, frankly, becoming increasingly intertwined with our daily lives, whether we realize it or not.
So let's wrap it up with a final thought. What does this all mean for your long-term outlook? Consider the historical volatility, that Red September narrative, right alongside the clearly increasing institutional adoption we're witnessing. Add to that these new high-stakes applications of blockchain for government transparency, for sovereign AI integration. Is the crypto world maybe moving beyond being just a purely speculative arena? Is it becoming a more fundamental, maybe even indispensable layer of global infrastructure? And if that's the case, what implications does that fundamental shift have for your long-term view of digital assets? Regardless of the day-to-day, hour-to-hour price movements, how might it reshape your understanding of trust and value and maybe even sovereignty in this digital age? Something to think about.